Hello everyone. This is the pre-market report video for today, 7th December 2023 for the Indian stock market in terms of Nifty and Bank Nifty. Last night, before the US market opening, ADP released the non-farm payroll data report. Here, please note, ADP is the biggest private payroll processing company, not the government. The government official one, some data is due today and some on tomorrow. So the data released was purely from ADP private database, but still this carries a lot of weightage. Anyway, as per their report in November month, the number of new private payrolls grew by 1,03,000 jobs. This was less than 1,30,000 jobs which economists had predicted. We know as per Tuesday night data, there was a decrease in number of job openings at the end of October month, which we discussed in detail in the last pre-market video. Together, these reports showing more evidence and suggesting that the labor market in US was not as strong as expected. This weaker job growth is exactly what market wants and supports the interest rate cut. As a result, along with good global cues, US market opened positive. However, the momentum was changed when the Reuters published poll results, which they conducted with 105 economists between December 1st to December 6th. Basically, they asked about the Fed's future rate hike plans, the possibility of future rate cuts, and the expectation of US inflation. Here, according to the Reuters poll, almost all the economists, 97 out of 102, voted that they believe Fed has finished the interest rate hike cycle. Simply, 97 economists said it's done, no more interest rate hike, which was positive and in favor of the market. Now, the next question is, how long the current interest rate 5.25 to 5.5% will last and the number of rate cuts expected next year. At present, market already factors and expecting about 150 basis points interest rate cut starting from March itself. Here is the problem. As per the Reuters report, economists are less sure about such early interest rate cuts. For example, just over half of them, 52 out of 102, don't see any interest rate cut at all, at least until July. Moreover, 72 out of 102 predicts there will be a maximum of only 100 basis points in interest rate cut next year. So, both of them were against. Market expects from March, where analysts think it's July. Also, market thinks 150 basis point interest rate cut next year. Analysts said only 100 basis point interest rate cut. This is the first negative on the report. Then the second, very important, almost all of them, all measures of inflation, consumer inflation and its score, PC inflation and its score, all are expected to decrease gradually over time, which is good. They are predicting that it will stay above Fed 2% target until at least 2025. This is huge negative. This report, nervousness around tomorrow release government jobs data and profit booking pushed the US market down. In the end, Dow Jones decreased marginally by 0.19%, S&P 500 down by 0.39% and Nasdaq decreased 0.58%. However, VIX was still the same yesterday, just below 13. Then coming about oil, we know and we discussed a lot almost in the last 4 videos about the OPEC Plus meeting outcome, voluntary oil production cut move and why it is negative. In addition, yesterday, Citi analysts released the report that they think at present at least there is over 3 million extra barrels of oil per day more than the global demand, which in turn made the oil to drop another 4% last night. Anyway, at the time of this video, Brent crude dropped to 74 US dollars per barrel and WTI crude dropped near 69 US dollars per barrel. I mean, I'm not complaining, dropping oil price is always good for India. Then regarding Indian ADR, please pause and look at the table. All 4 major stocks in US traded in line with Indian market. If we calculate the arbitrage with the Indian spot price means, then for both banks and IT stocks, it's indicating flat to negative. About GIFT Nifty, today early morning it closed at 21,061. As per yesterday Indian market close, at present the premium is 120 points. Equating to the spot, it's indicating proper flat opening. So those were the things that happened yesterday and last night in the global market. Now let's look at the India specific information. First, we know Nifty is in the all-time high level. So I just want to know whether is there any more room for upside. I mean, again, to understand that, in the last 2 days, we discussed some generic info with respect to Nifty. For example, on Tuesday pre-market video, we discussed about the PE ratio. Yesterday, we discussed how FII reduced their short position and also increased their long position. On that basis, today, let's see the top 6 Nifty stocks, how far away it was from its all-time high value. I mean, Reliance, HDFC Bank, Infosys, ICICI Bank, ITC and TCS, all these 6 stocks together consist of 51% weightage. So it's important to see, is there any room for further upside. Here, in line with Nifty, only ICICI Bank trading at all-time high value. In contrast, Infosys is still over 33% away from its peak value it reached in January 2022. All other 4 stocks still 8 to 12% away from the all-time high value. Moving on, about institutional activities, still the trade volume is at the elevated level than that of the regular average trade volume. However, after 9 consecutive sessions of buying, FII turned as net sellers. The net sold marginal for around 80 crore rupees, and as usual, DII supported. The net bought for near 1400 crore rupees, roughly the same amount which they net sold on Tuesday. Other than that, there is not much. It's just TV18 and Network 18 is going to merge together. So those impact we can see on those stocks. As a summary, US market closed marginally negative, and also at present even US future market is trading in marginal negative. Then in case of Indian ADR and GIFT Nifty, both are indicating negative to flat. Let's see. Just one more thing, not just for India but all the countries in the world, Moody's, a US-based credit rating company, gave a negative outlook for all global banks in 2024. Here, I don't know how much it will impact, but be cautious, and also our market consolidation is pending. About the things to look out, first, early morning, Chinese trade data is due. For some reason, if it's contracted more means, then that will affect the global momentum and to some extent our metal stocks as well. Then, during our market time, not much that I'm aware of. However, in the aftermarket hours at 3:30 p.m., Europe's Q3 GDP data is scheduled to release. And in the night for US, weekly jobs insurance data, new building permits and Fed balance sheet, which will largely influence the bond value and in turn affects the stock market. So these are some of the items we need to keep an eye out today. Coming to technical, again, Nifty opened a gap up of 100 points and really very volatile in the first half. However, in the afternoon, it rebounded and hit another fresh all-time high value, 20,962. So, for the 7th consecutive session, Nifty closed on the positive side. Thus, on the daily chart, it formed a small negative candle with a long lower shadow. Technically, this pattern indicates a formation of dragonfly doji type candle. This is the first consolidation signal. Second, yesterday the daily RSI value reached 84, which is a serious overbought level. Third, yesterday buyers have been able to hold on to their gains, all indicating the consolidation signal. So now a reasonable decline in the next few sessions is likely, and if it happens, then it's the confirmation of short-term top reversal, as it is now trading around the psychological level of 21,000. Also, on the hourly charts, the momentum indicator has a negative crossover, which indicates a loss of momentum on the upside. So, on the upside, 21,000 to 21,060 shall act as the immediate hurdle zone, and 20,800 to 20,730 shall act as the crucial support zone. In case of Bank Nifty, it also opened on a positive note. However, it witnessed profit booking at higher levels and fell below the 47,000 mark, down by 178 points at 46,835, and it closed in the negative. Thus, on the daily chart, it formed a long bear candle after a high wave or doji kind of candlestick pattern in the previous session. So, it's more clear Bank Nifty is now in a consolidation mode with a range of 46,400 to 47,200 over the next few trading sessions. Then, regarding open interest data, the maximum weekly call option open interest was at 21,000 strike and 21,500, with new call option writing at 21,100 strike and then 21,300. Thus, the options data indicating 21,000 is expected to remain as the key resistance area. Whereas the maximum put option open interest was at 20,800 strike, followed by 20,500 with new put rating at 20,900 strike and then 20,800. Hence, the support is at 20,800 to 20,500 area. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.